Hey everyone, welcome back to Corporate Decoder. Today we are diving into the latest filing from Enhabit, a company in the home health and hospice business. Get ready, because this report has a few twists and turns that even a seasoned healthcare investor might find a bit unsettling. Think of it as a financial roller coaster, but instead of thrilling highs, we're bracing for some potential drops. This report is their 10K, basically a full recap of the past year, letting investors know how they did. For the year ending in December, Enhabit wants us to know that they are one of the biggest providers of health and hospice care right in your own home. Their main business is split into two parts, home health and hospice. Imagine nurses and therapists driving around helping folks recover at home. That's the home health side. In 2024, they saw about 40,987 patients every single day. Then there's hospice, caring for those with terminal illnesses. That side brought in $210 million in revenue, though it may not be something people are comfortable talking about. The need is only growing. The amazing thing is that people prefer care in their home, so Enhabit expects to continue to grow. The industry itself is expanding, and home health expenditures are expected to balloon to almost $300 billion by 2032. Now here's where things get a little bumpy. A government program called Medicare, which is key to Enhabit's revenue, made some payment changes, and CMS has plans to implement significant permanent and temporary adjustments. This is like a store getting a discount on their sales, but with the government, which means changes for Enhabit. Like all businesses, Enhabit faces challenges, or as they call them, risk factors. It's a good reminder that even the most stable-seeming companies have vulnerabilities lurking beneath the surface. Medicare is a big payer for them. If Medicare changes its rates, Enhabit will take a hit. As more people enroll in Medicare Advantage, which pays differently, things also get more complicated. It's a constant challenge to bring in revenue while keeping costs down. If they don't manage to do that, their referrals from hospitals and doctors will go down and their business will suffer. Because they are involved in Medicare and Medicaid, they are routinely audited, which could result in repayments. That's really scary because failure to comply means they might not get to participate in Medicare at all. And of course, they have to stay compliant with HIPAA, which, if they fail, could result in fines or other penalties. Even the cost of fuel can hurt their business, as their employees visit patients' homes in their own vehicles or company fleet vehicles. Talking about labor, attracting and keeping quality employees is tough. They need to offer good wages in order to do so, which means it will be hard to spend less on labor. There's also a risk of material weaknesses to internal controls, basically making sure they can report their finances on time. And as if that wasn't enough, the value of their goodwill is based on estimates, so if those estimates are wrong, they might have to write down the value of those assets, resulting in more expenses. Because they have debt, a lot can go wrong. If they can't generate enough cash to pay their debt, they might have to sell assets or declare bankruptcy. It also limits how much they can borrow to use for the business. Of course, there are natural disasters which can cause disruption. Looking at the results, net service revenue was $1,034.8 million for the year. The increase in Medicare Advantage patients has impacted revenue, but that's balanced out by the hospice segment's performance with a 3.9% increase to hospice reimbursement rates. General and administrative expenses actually went down due to cost savings, but there was also a large charge of $161.7 million related to the writing down of the value of their goodwill. Looking at adjusted EBITDA, a measure they like to use to show their performance, the figure is $100.1 million. Enhabit's operations are subject to some state regulations called Certificate of Need laws. Enhabit says that it does have a program to ensure regulatory compliance. They've also added policies to avoid insider trading activity. And to protect their systems, Enhabit's cybersecurity program leverages guidance from the National Institute of Standards and Technology, led by their Chief Information Officer who has 2 decades of experience and a dedicated IT team. Finally, more legislative or regulatory changes may continue to impact their business. Now, let's put it all together. Enhabit is operating in a growing industry with a lot of demand, especially since everyone prefers to receive care at home. Their ability to adapt to changing government rules, participate in different payment models, and manage costs will determine if they can succeed. It is notable, however, that as they are now, they have had to make some adjustments to their long-term goals. On the other hand, their quality of patient care and award-winning culture enables them to develop strong relationships with health systems and facility-based providers, and can make it easier to attract key personnel. There are a lot of risks out there, but Enhabit seems to be handling things in the short term. However, some might disagree with the company's approach, given that their financials aren't amazing negative income, even if their adjusted numbers look promising. One big thing to note is that they are in compliance with their credit requirements. Enhabit is navigating some turbulent waters but has solid operations. Thanks for watching. Don't forget to like and subscribe for more corporate deep dives. What do you think about Enhabit? Let me know in the comments below.